Hello, everyone, and welcome to our webinar. Today, we will be exploring the topic of leveraging SAP Treasury applications as an ROI-driven gateway to S/4HANA. And I'm really excited for this particular webinar for a number of different reasons. Number one, I really like the subject. I think it's an opportunity for everybody to see how Treasury can really benefit organizations in the near term and drive ROI for S/4HANA. Secondly, I'm excited because I'm back online with Julio. Julio, we always have a great time on these webinars. And thirdly, I'm excited to introduce Kim Dowling, who has joined our organization. She is the head of our Treasury practice. And Kim, why don't you just take a second to introduce yourself to everyone, and then we'll dive into everything else.
Hi, everyone. Thank you for joining today's webinar. Yes, I just joined Bramasol about a week and a half ago, so I'm really excited to join this team and start really getting into the space of S/4HANA. It's really got a lot of great information in there, and from a Treasury practitioner in my past life, I'm really excited about having all our other clients see the benefits.
Great, thanks. And Kim brings a wealth of experience with pharma and a number of other companies, so we're excited to have her here. So welcome. Why don't we get started? We have our typical housekeeping items. The webinar is being recorded, so you can look for that to be up probably early next week on the website if you want to share it or follow up. Feel free to ask questions. Julio will be online checking the question screen. And you can ask questions throughout the session. And then again, obviously, you can download our previous webinars from our homepage here at bramasol.com. You can check the resource center. And then further down, if you scroll down on the page, you'll see there's a whole bunch of webinars there that you can check out content. And we've tried to arrange it so that you can look by topic. Here we have RevRec, leasing, and there's our Treasury topics as well. Contact us. We'd love to have you reach out. Come to bramasol.com. We've got some great content. We have an opportunity for you to ask some questions and we'll answer those. Facebook, we are up on Facebook, so feel free to join us and ask a few questions, join the conversations there. And of course, LinkedIn is a great place for everybody to network and learn more about Treasury. Today, we're going to do a quick introduction. We'll talk about key Treasury drivers. We'll talk SAP Banking Connectivity and then wrap up and see if you have any Q&A out there. So with further ado, let me introduce, there's a lot of new people online, I noticed. I want to talk for a moment about who is Bramasol and why are we doing these webinars. Bramasol is the leader in SAP Finance, Compliance, and Transformation. We do this through our three pillars: leasing, treasury, and revenue recognition. We've been involved in these areas for a large number of years, and we underlie this with deep analytics, dashboards, and disclosures. Last month, we did a webinar on our disclosures. I encourage you to take a look at those. It's a great way for companies who are interested in IFRS 15, 16. We'll be doing some IFRS 9 disclosure shortly to get something that gets you started quickly and is FASB and IASB compliant. And finally, of course, we leverage the SAP Finance Innovation Platform, SAP S/4HANA. And I'm really excited because S/4HANA brings such a tremendous benefit to customers who are looking at leasing, RevRec, and Treasury. And of course, as a reminder, while leasing has been our focus, it's really all about the procure-to-pay process, and that's what we do. We are experts in procure-to-pay, order to cash, and then the cash and risk and all of the Treasury components, including things like record to report. So why don't we dive in to the CFO priorities. One of the reasons we're here and we're talking is because the priorities for CFOs and treasurers have really changed and evolved over the past few months or few years. And you can see here from a recent study from PwC about a global treasury benchmarking survey. I like this graphic, but there are others just like it that talk about the real importance of different elements and the rise of these importance. And for CFOs now, it's access to cash, it's managing risks such as currency risk, understanding your your capital structure. You know, what's my debt to equity ratio? What has the impact of the leasing regulations had on your capital structure as you move from doing off balance sheet financing and moving these leases on? And then the cash, you know, again, cash management. So we see that cash, access to cash management, risk are all big issues. And those are driving a lot of the initiatives and thoughts that CFOs and treasurers are having. And this really comes down to some key trends that we've been able to identify in Treasury. Number one is it's about diverse global operations. As the economy continues to expand globally, what we are seeing is that companies are having diverse global operations. In the case of Treasury specifically, we see more and more companies with multiple Treasury centers of expertise in the North America or in the US, in Asia, and then in EMEA. And that challenge requires you to think about how are you managing your cash across all of those, and what are you looking at as there's no real close to your banking day. Maybe there's an hour and a half to a 2-hour window in there, but really there's no close to your banking day. And what does that mean? Changing compliance requirements. We've talked extensively about IFRS 15, 16, but we know that IFRS 9 is out there, the similar ASC regulations. We continue to see the evolution of things like CECL and other aspects around requirements, and Julio is going to talk a bit about that in a moment. Regional and local regulatory mandates, whether they're regional and local to the US and states, such as California Privacy Acts, but also in Europe, where we see things like SEPA and SAFT and other regulations and regulatory mandates evolving. Escalating risk factors in the financial region. You know, that's all about, you know, as we see the global economy continue to intertwine itself and the effects of things like the China-US trade challenges, Brexit, the never-ending story from the UK, issues in EMEA around EU membership, not EU membership, and of sort, and challenges that we also see in South America. Graphically diverse banking relationships, we talk a little bit about that in our global operations. And then, of course, international trade brings in things like foreign currency, commodity, and environmental and global risks. So with that in place, I'm going to take a moment. Julio, you just came back from a conference in Washington with the SEC. Talk a little bit about what you've learned about some of these things and the changing compliance requirements and the regional and local regulatory mandates for our audience.
Yes, thank you, John, and thank you for having me back on this great webinar. I just came back from Washington, D.C., as John just mentioned, and the conference I attended was all the SEC, FASB, and AICPA, as well as the IASB regulators. They get together twice a year, and the audience is CFOs, controllers, treasurers, and basically the topics are what's going on in the latest regulations from an accounting perspective, and how does that impact reporting, accounting, and for all the preparers and the auditors themselves. So from this conference, we see a lot of new trends in Treasury from an accounting perspective. As John correctly mentioned, the first one is CECL. Now, that means that all companies have to start looking at credit losses. Credit losses is essentially going, as opposed to the old accounting where you had to wait till it was probable and estimable. Now you basically have to start forecasting your losses from day one. Now, as you can imagine, the responses from CFOs and controllers is that how can I forecast on day one when I've just started the transaction? Well, that's exactly what it is. It's about estimating based on historical averages what your losses will be. The second big trend from an accounting perspective in the Treasury space is, as John said earlier, is the new hedge accounting rules. It's ASU 2017-12. There are really 4 big components that's going to affect all the accounting going forward for derivatives and hedging, which is basically four areas: excluded components, presentation and recognition, effectiveness testing, and accounting for ineffectiveness. Basically, the new rules will amend effectiveness testing for income statement presentation and disclosures. It will also permit additional risk management strategies that qualify for hedge accounting for both financial and non-financial hedges. And I will also remove several provisions that had made it difficult to apply hedge accounting in the past. We will have a lot more to come in future webinars on the changing trends in treasury accounting when it applies to hedges, derivatives, as well as credit losses. But for now, we just wanted to give you a good summary of there's a lot changing in the treasury accounting landscape, and Bramasol, as always, will be on top of that as we move forward. John?
Thank you, Julio. I think that, you know, I see a number of opportunities there, and we'll talk about those later on. Of course, we'll do our some more webinars. Kim, why don't you take a moment to comment? You know, you've had a lot of experience in this space. Share kind of a couple of your insights into some of these areas, particularly around you know, diverse operations and banking relationships, et cetera.
Yes, John. A lot of these trends that you're seeing right now are actually the trends that we are facing in Treasury and what we're usually talking about. And in addition to what Julio was talking about, you know, Treasury is also looking to become much more digitalized and data-driven to help us actually enable the insights and the visibility into the data so we can actually have faster and more nimble decisions that we can make in real time. So these are, you know, something that we're really moving into right now and looking at the best way to make that happen.
Thank you. I think you hit the nail on the head. You talked about in the great lead-in, the increased speed and dimensions of change are a huge aspect of what we're seeing, and this idea of being the need for data in real time and connectivity is becoming more and more apparent as we go through and talk about the power of something like S/4HANA brings to it. And then, of course, everybody is asking about technology innovation and the increased use of tools such as machine learning and AI. And we see this more and more, in particular, in areas such as automated bank reconciliations, automated tools around GRIR, automated payables and receivables, a lot of work there that enables that foundational element that you can then move on and really focus on the insight to action and the analysis. But what does this have to do with banking connectivity? I would say everything. Banking connectivity has everything to do with what we've discussed. It is really the foundation for the security, completeness, accuracy, and timeliness of data insights. And what I mean by that is if you don't know where your cash is and with whom and when you have access to it and what changes are going to happen, how are you going to manage your business? It helps drive real-time cash position. And when we talk real-time, we're talking real-time. You can go in and look at your account balances. You can go in and look at things, you know, ins and outs, ins and outflows, and et cetera. And then your integration with AR and AP speeds the visibility, getting you into the market faster. And we'll talk about some of those in our use cases. You want to secure it and add workflows. One of the things that we've observed Treasury and CFOs getting more and more involved in is, number one, of course, compliance due to the new regulations, but really being asked to look at things like SOX, ICFR, SOC, and other areas to ensure not only that their own cash is secure and that people can't put ransomware and hold their cash, but the cash that goes with customers or the access to credit cards or ACHs or everything becomes more and more, seems to be moving over into that treasury component in partnership, of course, with the CIO. And then, of course, banking connectivity helps you manage costs. And we'll talk a little bit about that, you know, things like fees and compensating balances. So I would tell you that to us, and I think my colleagues at SAP, and I've talked with colleagues at Big Four and others, I think we all agree that banking, cash position, cash management is really a foundational element to your ability to transform and become a 21st century, if you will, finance organization. So with that, I will turn it over to my friend Julio. Julio, why don't you take us through a couple of the use cases that we have seen here at Bramasol and talk about how that, understanding that underlying all of this, of course, is the SAP S/4HANA. And this is in an S/4HANA environment. You can do some of this in ECC, but it's even more powerful in S4. So Julio?
Yes, hi, John. So just before we get into these use cases, John, there's a lot of acronyms in the Treasury space, especially in the SAP Treasury space, that I wanted to spend a couple of minutes just making sure everybody's on the same page. So we talk about three main solutions as we go into the SAP Treasury space at this point. And we're going to talk about the SAP BCM, or Bank Communication Manager. What does that do really? It's really an approval mechanism for outgoing payments using workflow methodology. Basically some of the benefits you're going to get from that is reduction of your manual efforts. Then we're going to talk a little bit about the SAP MultiBank Connectivity solution. Some of those benefits will be having a single point of corporate to bank connectivity, increasing your visibility and control all over your connections to your financial institutions. And lastly, we talk about EBS, which is your electronic bank statement, which is a central component of payment transactions in the SAP system. And that supports your incoming payments as well as outgoing payments. So with that level setting, let's talk about our first use case that we saw at Bramasol. So we have a customer in Texas where, because of their processes, they were unable to resolve their cash position until mid to late afternoon. From their estimation, not ours, they were saying that this was costing them between 10 and 20 basis points. So what was the solution we implemented? We implemented SAP BCM, which we just talked about, and using EBS, electronic bank statements from SAP, which basically allowed them to get into the market a lot earlier. We talk about intraday. This company was unable to get into the market until the afternoon. With these implementation procedures and using this software, it was basically real-time information. So what was the impact on that? Well, obviously, Treasury had a better understanding of their borrowing, their investing position. They were able to enter the market earlier than most, which is very important, which basically allowed them to save over 10 to 20 basis points on borrowing. So I want to talk about this when we talk about real-time cash positioning and bring Kim into this discussion. Kim, you've seen this sort of night to day, day to night change in companies using technology to have real-time visibility. Why don't you talk a little bit about that?
Yeah, well, if you think about it, working capital or cash is king. You really need to, it's the whole lifeblood of our companies. And it's really, we also use it as a key performance indicator because we really need to be able to manage our cash in a very comprehensive and real-time productive manner. If you don't have the visibility, you're not going to be able to make the quick, nimble decisions that you need to make. You're going to have money left on the table. You're not investing it in time. You're not being able to fund your business. There's so much involved if you don't have that visibility, which can really cause you a lot of issues and to lose a lot of money at the end of the day. So having the straight through real-time visibility is the key to Treasury.
Yeah, and when we talk about ROI here, Julio, I note at the bottom, this company believed that it could save well over $1 million.
For sure.
We've talked to gone through a recent sales cycle and with a customer who identified that for them, because they're cash rich, getting into the marketplace and having more options was going to give them, even above 20 basis points in extra earnings that could amount to $5 to $6 million. So when we talk about, can you use Treasury as a way to fund or show near-term ROI? This is a great way to do that for, even in ECC, but certainly in S/4HANA because of the powerful way in which SAP has integrated Treasury into S/4HANA.
And John, if you think about it, when you look at it from what is the process? So you're going to ask your executive board, your CFO, CEO, to approve a spend on a project. And when you go to them with this type of information saying that this project will basically pay for itself with that $5 to $6 million annual savings, it's a much easier conversation to have rather than saying, well, we really can't quantify. Because as we all know, John, when we go to executive management, they want to be able to quantify these savings or these additional monies that we will realize in the future. So it's a very powerful case.
Yeah, because our clients are always asking us when we meet with them, so why should I do an S4HANA project? And this is a great example of why you can do an S4HANA project, and it makes sense to lead with something like Treasury.
And you can think about all the different savings you're going to have on your bank fees and not having to have all those compensating balances sitting there.
Yep, absolutely. Talk for a minute. So another client that we had, focused on the banking side of it. Talk a little bit about that, William.
Yes, so this was the result of a merger. So we have a customer in Europe, a Fortune 10 company that purchased a smaller Fortune 500 company in the United States. And as a result of that, this project was twofold. It was first to improve internal controls because the parent company now wanted more visibility to the subsidiary, the newly acquired subsidiary. And secondly, there was a number of expenses that they could not see just because it was a fully manual process. So the scenario included, it was an M&A scenario, and basically the parent asked us, can you rationalize a global banking solution so we can get that visibility to understand what is the spend on a real-time basis for the subsidiary. Mm-hmm. The challenges for this project were very significant. It was a very tight timeline. It included over 35 entities, and this company wanted to see a clear path to S4HANA. They also wanted to avoid some costly workarounds. So what were some of the benefits that they rationalized, that the company, both the parent and subsidiary, realized? Well, we always talk about these projects in two different perspectives. Before you get into the technology, we always advise our customers that we need to rationalize their business process first. In this project, the rationalization of the bank accounts was critical because we've seen, John, over time and time again, that companies, through acquisitions, they end up with thousands or hundreds of different bank accounts. And when we ask the question, why do you need 500 bank accounts? We get this, well, we're not sure. So we always advise when we kick off these projects, we need to do a business process rationalization. Now with that, we actually reduced the number of bank accounts significantly. And then obviously the company, the parent company, had much more visibility, real-time visibility across time zones of this newly acquired subsidiary. I wanted to bring in Kim now to sort of discuss from her perspective on the benefits of vendor payment automation and what you've seen in your storied career, Kim.
Hi. So a couple things, think about it. When you're looking at the vendor payments, a lot of times, I like back in the days, like you have a bank account for every single payment you're going to make out of it. You have a bank account set up for every single entity, and then you're making these payments out of all those bank accounts. Why not have one bank account which makes all the payments, and then you can pay on behalf of to all your other entities. So you're doing all the accounting on the back end, but your physical cash is only on the main entities that actually need to actually make the payments themselves. So it's a lot of you still have the straight through processing, you still have the visibility, you have the automation and the accounting. At the same time, you're saving on all your banking fees and all your other connectivities that you have to have within the third-party banks themselves. That's some of the benefits that I see from some of these capabilities.
And Kim, talk for a second, because you and I talked over the, when we met last week, and we spent, I've had the privilege of spending a fair amount of time with you. Talk for a moment, because you've spent a lot of time with external, non-integrated treasury management systems. What do you see, particularly in S4HANA, as the major benefit for customers in an integrated solution like SAP?
Well, a couple things. the first thing was every time I put one in, they're gone tomorrow. Someone buys them and knocks them out in the marketplace, which was always frustrating after I spent all that time and money and efforts. But the real business benefit that I'm seeing when I'm looking at S/4HANA compared to, what I usually do is everything's integrated. It's the same, trying to find out who's going to push the file to SAP from third-party system, who's going to verify that the master data is in there, it's not going to bomb out, and who's going to, there's so many different hand holdings that you end up having to do. When you have the straight through processing, it makes it so much easier. And also when you now have visibility of all your payables, all your receivables, what's going on with your, your sales and so forth. I mean, now you have the visibility to all of that. So you can actually make it much more straight through and able to be much more nimble instead of having to have all these interfaces that you have to maintain and support. It's a big costly, people-wise and technology in the end.
Yeah, and of course the new Fiori interfaces are really nice, and
Oh, that's very cool. Yeah.
Yeah, we're going to do some webinars in early next year, and we'll show you some more of those really great interfaces that the SAP team has done with some more demos.
It's lovely. I love that. It's great.
So at the end of the day, here we are, a customer rationalizing banking. It's easy to look at it and say, well, I cut down the number of bank accounts, and so I saved some fees, and I did all of that. But what also, amazes me when I hear, companies talk about this is also the cash that they freed up because they don't have to have compensating balances. And
exactly.
you don't think about, not only have you freed up the cash to do something, but that means you no longer need to borrow that cash in the marketplace, and it's an indirect savings because now I don't have to borrow at whatever percent, a couple of $1 million, and you can save potentially hundreds of thousands, if not millions of dollars over the period of a couple of years. And again, here you have two benefits that already we've added up to several millions of dollars to rationalize or talk about why to do an S/4HANA project. Let's move to case number 3 because I think that's a really a cool one too. Julio?
Yes, John. So this situation, it's all about the cost, right? So when you have, the more bank accounts you have, the cost rises, obviously, because you have wire fees, you have ACH, you have wire transfer fees. And for some reason, I'm not sure why, but we see that banks have been quietly increasing their expenses, their fees over the last 5 years. I'm not sure that's why a good reason why, John, that's why banks are so profitable, but it has caused CFOs and controllers to really start looking with a fine-tooth comb about what are my banking fees. I think we get a lot of questions from our customers when we go to these conferences about what are you guys doing to reduce banking fees at your customers? And this is a perfect example where the company had multiple bank accounts across various regions, international regions. And here's the thing with this company, with our customer, it wasn't being consolidated. So all the banking fees were being captured at a local level. And when it came to consolidation, what the CFO told us, it was never correct because he himself had tried to do a number of reconciliations and it just was not coming out as expected. So what did we do? Well, we leveraged SAP's cash management solutions. We used the MultiBank Connectivity and BCM Manager, which really allowed them to optimize and consolidate their relationships. So we talked a little bit about the MultiBank Connectivity solution, which basically you're using one pipe essentially that connects, that SAP automatically connects to over 100 different banks, whereas you had to go in and log into each bank to do transactions. You're doing it in SAP. And Kim just mentioned about the ease of use of integration. That's a powerful thing. But even more of the ease of use of integration is now you get visibility. So we talk about, in our previous example, about visibility over your cash. Well, how about I propose to you visibility over all your fees? Because that is exactly what companies are requiring this day. When we talk about working capital, when you start saving dollars on the amount of banking fees, it could be very significant. We actually attended, John and myself attended the AFP conference some months ago, and one of the main focus for CFOs going in, treasurers going into the next 5 years, was they want to reduce the number of bank accounts because for some reason, as we just talked about, the fees from the banks have been slowly but surely increasing. I want to bring Kim in now to talk about, because she's seen a number of different projects, non-SAP and SAP. What your perspective on that, Kim, on banking fees?
Well, yes, they're going to continue to go up, whether you're doing a wire, ACH, or whatever you may be doing. But when you're doing the straight-through processing with the banks, you're still going to have those fees depending on how many bank accounts that you have. But when you can actually take a straight-through processing type system such as SAP, and you can reduce those number of banks, because now you can do that seamlessly, build up the rules to do the pay on behalf of or the receive on behalf of, it gives you much more flexibility to be able to pay or collect your money more seamlessly and still have all those other, excuse me, I'm losing my voice today. Those other, the accounting actually be straight through and tie right in with and beautifully reconcile without having to spend all the time and money to reconcile it, and by having all those many different bank accounts for every single entity that you have. And it's just a lot of cash to try to manage when you have all those various bank accounts. And it's not as efficient.
Now, Kim, you are talk about two concepts that maybe you could explain to our audience so everybody's on the same playing field. Payments on behalf of, collections on behalf of, as it applies to Treasury. You want to give just a quick summary of that and as it connects to our Treasury processes?
Yeah, it actually, pay on behalf of is when you're making your payments to a third party, and then receive on behalf of is when you're receiving money from your customers. So that's the pay and that's the receive side of it. So on a pay side of it, as an example, you could actually have one of your main header bank accounts for one of your main entities that could be actually the payer to all of your different vendors. So you'd be making your payments out of that bank account, but they would be doing it on the behalf of your other entities. When you're doing that, you could have the rules set up that yes, they collected the money, but then and then you can actually reconcile and do all the accounting for booking your payable, doing your cash clearings and booking your actual cash and reconciling. But at the same time, you're going to be able to do the, hey, this entity did this on behalf of all these other entities. That could have been, all your other international entities. It could be domestic entities, whatever. But the rules are built in to seamlessly settle that within some of the tools within SAP. You can do it manually if you felt like it, but you can easily do it in a batch job, and it all ties together and reconciles and just reduces a lot of the churn and time and efforts that people make in the reconciliation. Obviously, you just saved a bunch of fees as well, because now you're not having all these third-party bank accounts set up. And the receivable side is the same thing. It's just the opposite side, collecting from your customers or paying from your vendors.
Right. Now, Kim and Julio, I've heard about different types of payments. You have treasury payments that we know about. Those are generally, things, easy things to think of in treasury payments are debt, cash for, borrowing, etc.
Interest.
Interest, dividends, etc. And then there's operational. The nice thing that I understand here, maybe you can talk, Kim, for a second about if you have a non-integrated system, you have these two things working in parallel and they might not be connected. In the SAP world, particularly with S/4HANA, you're now connecting them and you're getting a better perspective, I understand, for your total bank relationship.
Right. Right. Well, what I was talking about earlier was your your third-party payables and receivables, which are called your operational side of the fence. That's your operational payables and receivables, where your treasury side of it is typically, it could be emergency tax payments, but are usually related to your investments, your issued debt, bonds, things of that nature, or your foreign exchange transactions. But most of the work that I've done is, it's all segregated, it's separate. We don't have visibility to what's going on with my payables and receivables. When you think about a huge global company, like some of the ones that I've worked with or worked for, they have their own centers of excellence, and that's where, and they're doing all their payables and receivables. But when you're sitting in treasury, you need, cash is king. You need to know what's going on with your cash. Where is it? Do I need to fund? Do I have excess cash? You need to see that whole full picture across the entire organization. When you have an integrated system, now you have the ability to pull that information into one central place, so you can see what's going on with your treasury related type transactions as well as your operational transactions, and look, and even take a look at your sales, your projected sales, your sales that you just made and so forth that may not have been settled yet. So now you have full visibility, and you can actually do your forecasting and planning all straight through in one place, real time at any time. That's what I love about this, the way they've re-engineered this. It's just, the visibility. I can make decisions that I need to make very quickly.
Right, and you can then look at your DSO, your DPO, and really get a sense of your your currency cycles, right?
Exactly.
And really get a sense of that. Yeah.
And make better
the
financial decisions.
Right. And at the end of the day, and why are we talking about this from a banking perspective, is because most companies aren't sitting around like the old days of the East India Company with giant coffers of gold coins. Their money's in banks, right? As much as that might be a great visual, most companies are sitting around with all of that money in banks or banking-like institutions. And it's so critical that you get this right and have the real-time visibility and accurate visibility.
Or even if you're doing a merger and acquisition, you need to know when do you need to free up that cash? How fast can you do it? What's it's like makes them a lot easier to run your business end to end.
Right. And the same with divestitures, right? Same thing.
Mm-hmm.
Hey, John.
Yes, Julio.
Maybe you can talk a little bit about, because from all these conferences we've been going, some of the number one reason for the new treasury systems is planning, liquidity planning, cash forecasting. We know from talking to various CFOs and treasurers that it hasn't been up to speed. It hasn't been as accurate as they would have liked. And maybe you can talk a little about how does that intertwine with S4HANA and SAC and give some of that planning optimization.
Yeah, so we'll touch on that now, and actually that's going to be yet another one of our great webinars next year. We're going to talk about planning and predictability, predictive accounting. So we're going to do a lot of that with our friend Haresh from SAP. What Julio is referring to is at the AFP, I ran an informal survey of Treasury and Treasury professionals. And I talked to probably about 20 to 25 different people, ranging from actual treasurers to people managing cash on a real-time basis. And two of the top areas that came out, there were three major areas that came out. Number one, almost every single time, was cash position and cash flow forecasting, and really getting a handle on, not just what's my cash position today, but based on what I know about the market, based on what I know about my sales and my collections policies and my collections activity, how do I do cash flow forecasting for the future? So how do I then cover that risk? Because the number two aspect was risk. And every single one of these folks talked about two major aspects, maybe three, but two major aspects of risk. Number one, Julio, as you know, was foreign exchange risk. How do I cover myself as I begin to do more and more global business and I have cash out there further and further and further? How do I begin to use derivatives and hedging to offset the currency risks that are there? And then for those who are very involved in trade, of course, the risks that are pushed into the foreign currency are around global trade risks. And those global trade risks really fall into a couple of categories. One is their influence directly on, or indirectly, if you will, on foreign currency. But the second piece is the influence on what Kim talked about, which is taxes, tariffs, fees, and how are those changing? And if you can begin to do cash flow forecasting and have a vision in the future of where you're going, you can begin to look at, where do I need to do COBO or POBO, or where do I need to look at in-house cash or cash pooling or netting that we'll talk about again in the future, all concepts that are important. but these have huge implications. And the way you do that with S/4HANA is with an underlying the universal journal, you have real-time access to the actual transactions. And by leveraging the SAP Analytics Cloud, you can aggregate this data together and use some of the predictive tools that are out there, such as, and we'll talk about these in the future, SAP can help you with your exposure management. Whether it's your commodity exposure management, your cash exposure management, market risk, there are tons of great tools out there that have come about because SAP and partners like Bramasol have been able to take advantage of the real-time data, the power of a tool like SAP Analytics Cloud, and then provide that insight. So again, those are the top two related to one another. And of course, the third was all about what we talked about earlier, which is cybersecurity. As you go through all of this expanding global business, you become more and more at risk in the cyber world for people who can hack into your system, whether it's from all over the world these days. We're finding people hacking into systems and using ransomware. So absolutely, thanks for that question. So with that, our approach, let's talk a little bit about Bramasol and our suggested approach. The first thing we suggest you do is perform an assessment to identify the opportunities for ROI improvement, efficiency, or cost reduction. The purpose of this is to identify pain points and opportunities. It's really to help you understand. We do assessments and we do road mapping. We come in and kind of help and look at what are you doing today? How does that map against best practices or what we've been seeing with our team of experts who have combined probably 150 to 200 years experience in treasury space and really help you understand what other companies are doing and where there's opportunity. We then work with you to create a multi-phase roadmap that focuses on initial wins and to drive long-term finance transformation. And we'll talk for a second in a moment about comply, optimize, transform. But we also like to follow this idea of a fit to standard approach. And what does that mean? Fit to standard differs from fit to purpose in that we ask people to really look at why can't the best practices, why can't the standard approach work for you? It's been developed whether you go to SAP, which is what we do, or any other system, there's a standard approach. AR is AR, cash position is cash position. The day in the life of a cash manager is the same. They come in, they look at the cash in the morning, they get their bank positions, they go through and look at their AR, AP, they forecast, they do their decisions on whether they're going to borrow, et cetera, et cetera. That process is all the same. So you can use a fit to standard approach. What we recommend is to think about it from the framework of comply, optimize, and transform. And what that means is, comply, really get your transactions right, get transactional excellence, understand what your cash balances are, understand where your fees are, understand, that your transactions are being made in a way that drives transactional excellence, gives you insight into making sure that they're correct, accurate, that they are complete, and that they are in support of whatever the key compliance for regulations say, whether it's an ASC, ICFR, SAB 74, whatever it is, that they all comply. Once you have that foundation in place, which is about the banking, you can then optimize and look at the automation of those processes. You can look at the optimization of everything from your entire cash process and begin to analyze whether it's your working capital or your cash or your risk. You can begin to optimize and integrate those processes, and finally, transform your business. And transforming your business is using tools such as artificial intelligence and machine learning to offload key activities or redundant or rote activities and allow you to then really look at the insights to really drive using tools like market exposure tools from SAP and SAP Analytics Cloud to drive improvement and make yourselves more nimble and the leader. And we suggest you begin the process now to achieve more immediate gains. Kim, Julio, any thoughts, comments on that?
Well, no, this is that's totally right in line with how I've always looked at it and how we've done it with all the Treasury and SAP implementations that I've done as well. It works very well to follow the systematic approach.
Absolutely. Yeah. These are a few questions that we ask in our assessments. We ask you about the number of bank accounts, what currencies do you use, your regulatory entities. Why do we do this? Because what we want to do is get a holistic understanding of everything that's going on in your Treasury environment. What are the different puts and takes? What are the key factors in your unique organizational issues? And really evaluate them in the context of your Treasury requirements. And how do we do that? We have a fantastic team working with a customer now in Pennsylvania, really doing some fantastic work around understanding what's unique to their business. They're a fantastic, amazing company that does 3 or 4 basic things. Each one has some unique Treasury requirements, but the team is able to bring that together with their expertise, leveraging SAP, and really give them a solution that's not only going to last them now, but for years and years to come. I talked a little bit about fit to purpose and fit to standard. And just to touch on that one more time, in the old days, we talked about fit to purpose. And that was all about focusing on customization and fitting the solution to your unique processes. Every business is special, we know that. But it was about customization. It was about deep discovery and looking at existing processes and filling Visio charts on the table or on a board, and really having tons of those. And then the approach is from the perspective of how am I unique or different? What we suggest in modern finance transformation, and particularly in Treasury, is why not focus on why not best practices? It allows you to look at the best practices, and it allows you to set a standard that says, well, if I use the software the way it is out of the box, it's less customization, it works and has been tested better, allows me to do better integration if that's what I've decided to do, and is kind of an approach that saves you not only effort in that area, but it saves you time, it saves you money, and this is a great way to approach any S/4HANA project. It gives you an early view of the software and how it works with a rapid deployment. So in a fit to standard approach, what you do is some early assessment, and then you start the agile process. And we get the customers and the users into the software quickly so that you can begin to look at it, play with it, and understand how it works for you. And we find that accelerates not only the project, but increases and enhances customer adoption. And the final piece is, again, to leverage best practices for common processes and focus on your true differentiators. If how you receive or collect cash is not something that's inherent to your business and differentiates you, then use a standard practice. The same things with how you pay. If it's all about your supply chain, then look at that, but don't look at common functionality. Try to use fit to standard approach to that. We think it works best, and I think SAP, and certainly that's the way the cloud is going. So if you have any ideas about cloud, AI, machine learning, all of those tools are better performing and work more efficiently in a fit to standard approach. Let's take a moment to wrap things up. I know we're running out of time, and let's wrap things together. So as we heard, many issues are driving the need to accelerate a finance transformation focused on Treasury. Julio talked about the compliance and what we're seeing at the SEC. Every day we hear about global volatility in some way, shape, or form, cybersecurity, and of course, everybody is trying to do more with less. How do we reduce those costs? By focusing on real-time banking, connectivity, communications, and cash visibility, you get a clearer picture of your cash, FX, and exposures, not just in the US, not just in one country, but really globally. It gives you this idea of straight-through processing from your banks into your ERP. If you're using a standalone Treasury solution, you don't get that. You will not get the same level of straight-through processing. You can optimize your investments and borrowings. We heard about that in the first two case studies, where companies were able to have a real-time vision of their cash position and what they needed to borrow or lend, and they were able to increase their ROI or reduce their cost of capital, saving them not only hundreds of thousands, but millions of dollars. They can reduce costs on things like banking fees, compensating balances, freeing up their cash to allow them to do more. And of course, by having the real-time banking in place, you've now set your foundation to include the use of things like machine learning and artificial intelligence. We recommend taking a project approach, leveraging the SAP integrated solutions and a fit to standard approach. We believe, as many people do, that the new SAP solutions are fantastic. There is still a ton of value to get out of them in ECC. We talk to customers every single day who are getting benefit out of just implementing the latest cash solutions or banking solutions in ECC. That will set you up for S/4HANA, where you will begin to realize the true transformational benefits. And to gain those benefits, I suggest you start now. Any thoughts or comments before we wrap up? Kim?
No, not anything particular. I think we've covered most of it, but I definitely have to say the fit to standard approach really does work. It makes it much more sustainable in the end, and the straight through processing is just it's a dream compared to what you could have when you don't have that visibility. It makes your life a lot easier.
Yep. Julio, you've been out there with a lot of our customers. What are your closing thoughts?
I think, John, from our perspective, because we've been playing in the leasing, procure to pay, and the RevRec space, order to cash, Treasury is such a great fit for Bramasol. And as we move into 2020, we'll be laser focused on just that. I'm excited.
I am too, and I'm excited because you mentioned something, and recently I was at a customer in Chicago, and we sat across the table talking to them about leasing solutions and leasing, and the treasurer came in because we wanted to talk a bit about Treasury as well. And I think Bramasol has a really, an SAP, because we bring together the leasing, the RevRec, and the Treasury all in one space, it gives you a unique opportunity to truly have a linked perspective, whether it's on where your revenue is going and understanding your sources of revenue, so that you can look at revenue in, right? Julio, we used to talk about the revenue in.
Yes, sir.
And then leasing is about some of the cash going out, whether it's assets, but it's the procure to pay process, and that combines into Treasury. And I think, he looked at it and said, we talked about, well, how are you going to look at your leases now that you have to bring those on your balance sheet? You have to manage those in a way that's transparent so that you now understand all of your leases and all your banking relationships. And I think that's a unique perspective that you can get only using a solution like SAP and a partner like Bramasol. So thank you both. I'm excited. This is our last webinar for 2019. I am excited for 2020. I want to thank the hundreds of people, if not thousands of people actually, who have come to our webinars this year. I'm excited for next year. We have some great topics around Treasury, S/4HANA, and we'll continue to show some leadership insights around revenue recognition and leasing. So look forward to 2020. I wish everybody a super happy, safe, and healthy holiday. And thanks, everybody. Have a great day.
Thank you, John.